Hello, I'm David Frazier, aka the Market Monk, and this is our daily Market Monk show, where we strive to tell you everything that you need to know and nothing more in regard to factors and developments that we expect to affect the value of your investment portfolio. So, today's big news or stories were about another big drop, supposedly, in momentum stocks. And actually, today's drop in the NASDAQ Composite Index had nothing to do with momentum stocks, even though that's what you're going to hear across the board on the major financial broadcast shows, that momentum stocks got hit again today. Momentum stocks did not get hit again today. Story stocks took a big hit again today. And if you're not familiar with the term story stocks refers to stocks of companies whose prices are trading at extremely high levels based upon speculators' expectations regarding the future earnings potential of those underlying companies, as well as the mass media's broad coverage of those types of companies and their stocks. Companies such as Athena Health, Palo Alto Networks, let me look here, Netflix, Tesla, Twitter. If you look at the prices of those stocks, a few months ago, they were trading substantially higher than they are currently. They pulled back quite a bit for very good reasons over the past few months. Yet, the prices of all of those stocks that I just mentioned are still trading at extremely high levels regarding the recent earnings of those companies and the realistic projections and the realistic projection of those companies' earnings over the next few years. Still trading at extremely high levels. These stocks should not be trading anywhere near the levels that they're still trading based upon the realistic expectations of those companies' earnings over the next few years. These are story stocks. So, it's not that momentum stocks are taking a hit. It's that story stocks took another big hit today, and they should be, because these stocks are still extremely overpriced. Now, if we look at the overall performance in the U.S. stock market today, the Dow Jones Industrial Average was actually up 118 points, approximately 0.7% today versus yesterday's close. The S&P 500 index was up about 0.6% today, but the tech-heavy NASDAQ Composite Index, where the vast majority of storage stocks trade, that is on the NASDAQ, was down 0.3%. So this is all about another big decline in storage stocks. And I expect those stocks to continue to move lower during the months ahead. They're still way overpriced. Now, what else did we hear today from the major financial media? Well, we heard a lot of talk about Tesla today, and how Tesla supposedly earned a profit of 12 cents per share during the first quarter of this year, and that their earnings beat analyst expectations of only 10 cents per share. So this was supposedly some really good news out of Tesla. But apparently, speculators, investors, and day traders have woke up to the fact that companies such as Tesla are not making profits. The reality of it is that Tesla did not make 12 cents per share during the first quarter of this year, even though that's what you're going to hear from Wall Street analysts, Wall Street money managers, Wall Street experts, and the major financial broadcast shows. In reality, Tesla actually lost 40 cents per share during the first quarter of this year versus a loss of 13 cents per share during the fourth quarter of last year. So not only did they incur some substantial losses, their losses widened substantially. Let's move to Twitter, which reported its first quarter earnings last week. If you listen to the major financial shows last week regarding Twitter, and once again, if you read the announcements from Wall Street analysts regarding Twitter, Twitter supposedly earned a profit of 2 cents per share during the first quarter of this year. In reality, they actually lost 23 cents per share. And their net loss in total widened, that is Twitter, from $27 million lost during the fourth quarter of last year to $132 million loss during the first quarter of this year. But if you listen to the major financial news outlets and the Wall Street analysts, supposedly Twitter made a profit. So what's causing the big discrepancy here? The big discrepancy has to do with companies of this nature, these storage stock companies. What they prefer to do, and what they actually do on a regular basis, is they will exclude numerous types of expenses from their reported earnings. In other words, it's like you and I claiming that let's see, I don't know, I'm thinking there for a second, whatever, that we had this massive amount of income that we made last year, and that we have this huge net worth. Let's say we have a net worth of, I don't know, $20 million, but we decide to exclude all of our debt. Well, that's just nonsense. You cannot exclude, you can't just pick and choose certain expenses that you're going to exclude from your earnings report and claim that you made a profit. You need to include all of your expenses just like you include all of your revenues in an earnings report. You can't just decide to exclude certain items. But that's what the Wall Street analysts do on a regular basis. They decide to exclude certain items, and companies themselves, in their announcements, they'll exclude numerous expenses and report their non-GAAP earnings, or non-generally accepted accounting principles earnings. Well, I don't do that. I look at the total picture. So that's what's going on here, and I expect it to continue to happen. That is, I expect these storage stocks to continue to fall because speculators, day traders, and investors are waking up to the fact that these companies' stocks are still way overpriced. Now, that's really all that I have to say today. There wasn't really anything else major to report regarding developments around the globe. So I'm going to wrap this up by saying, if you, I'm looking here to the left, I have some notes. If you're interested in more detailed analysis from us regarding not just any given day's developments and events, but a more broader view of what's happened during the recent past, as well as what we expect to happen over the next several months and up to about 18 months into the future, based on a thorough analysis of hundreds of economic statistics from around the globe, as well as geopolitical developments and just the trading action in financial markets, I urge you to try one of our newsletters. You can do so by going to our website at www.themarketmonk.com, looking over to the right area of the page that loads on our gold color menu bar. Click on financial newsletters, and you can subscribe to any of our newsletters for a period of 60 days at absolutely no charge. And you know, I don't want to get into saying anything else about that. This is not trying to oversell you on our newsletters. No, I encourage you to take a look at them and to try one of them, or several of them if you'd like. So I think that's it for today. Big drop in storage stocks again today, but the broader market indices are actually up to date. Thank you for listening. I'll speak with you again tomorrow.